everybody, this is your review for Tuesday, April 23rd, and as you can see on your screen, the first chart that we always look at is the SPY chart. Now this morning the market pretty much gapped up. As you can see from yesterday, we gapped up, and it was a very nice gap. Okay, so you do have to give the market credibility. Even though we are at pretty much all-time highs, the market still has some power in it, and we saw evidence of that today. We gapped up and then we floated up into the rest of the day. Okay, now we did have a strange occurrence in the day around 1 o'clock. I don't know exactly what happened, but apparently some news source, I don't know who, somebody got hacked. One of the major media outlets, I would assume, got hacked on Twitter, and somebody posted that there was something going on in the White House and that President Obama was injured or something like that. And of course the market reacted violently to it, almost made it to this gap window right here, and then of course the next candle, they came out on TV and said, well, listen, we got hacked, none of this happened, everything is okay in the world. And the market slowly went to the same exact level where it broke down and continued the rest of the day. And so if you were trading during these 2 or 20 minutes right here and you were basically short anything, you pretty much got a lot of money out of any trade you had at that time, which is really good. And then on the other hand, if you were long in this candle, you pretty much panicked big time. But the good news is that you made it back to the next level where you came from, where you started off. So it was a little bit of a scare, very interesting. It just goes to show you that Twitter is not all that it's made out to be in the news media and all of that. So TV is king, like they say. Now I did put out an intraday alert for the VXX, and I love trading the VXX even though it's very volatile. But I do like trading the VXX, and early on, I believe around this time, I know it was really early in the morning, I said that the market pretty much is due for some sort of pullback, some sort of volatility, and I'll go into that later to explain it to you. But basically what I said is, if I could pick up the $19 level on VXX, I'm going to do that. And sure enough, what happened? The VXX pierced the $19 level, and so you would have entered right here. Little did I know that there was going to be a scare on Twitter, and that somebody was going to say that the White House is being attacked or whatever they said. But you have to admit, if you bought it here, and you could have basically made 50 cents on a $20 or $19 stock. And so if you picked up this VXX with me, you made a ton of money really quickly. And none of this I could have anticipated. I'm not psychic. Sometimes the charts don't tell you everything. Nobody could have known this. But if you got your money, congratulations. Me, I was away from my desk. I wasn't even expecting for this to happen. So in this regard, it reversed down, and now I'm pretty much where I picked it up. Okay, so I'm even now. But if you were less busy than I was, and you made your money right here, congratulations. Okay, it turned out to be better than I anticipated. But the original plan really is for the VXX to do to go up a little bit. We do need a little bit of volatility in the market. And another reason why I say that is because we are in earnings season. I mean, just look at all the earnings we had this morning. I mean, look at Netflix. Netflix is up like what, 24-25% on the day. And there were other earnings as well. And today, of course, we got Apple after hours, and I'll discuss that in a little bit. But we are in earnings season, and so you're gonna see these days where we go up, float up like this, and days like this when we're slowly floating up, even though there was a gap up, the VXX will be silent. In other words, it will be around these lower levels. Okay, But the moment we get that volatility, the moment that the market starts reversing, we get some volume back in the market, that's when the VXX is going to go up to 21, 22, or whatever amount it's supposed to gain. Okay. And of course, like I said, if you got in today, you made pretty good money if you got out here. And if not, that's okay. Don't panic here, because this was never in the plan anyway. I never planned for this. Okay. And so if you picked it up at $19 like I did, I think now we're going to be looking the VXX into the rest of the week, to see what we get out of this earnings season. And if you look at the spiders on the 10-minute chart, let's look at the daily. If you look at the spider, you do see a pretty significant up move the last 3 days. Okay. And that gap up this morning, like I said, that was a very, very powerful gap. Okay. It was a very, very good gap. We haven't seen a gap like this in a long, long time. So yes, I do give the market um, some credibility here. It's pretty much, it's done a very, very good job. It's very bullish actually in the last 3 days, and it has held this 50 MA. I initially thought that we were going to break the 50 MA around this area, and the 50 MA, by the way, is this blue line right here, not the straight one, but this moving average right here. I initially thought that we were going to break it here, but now, okay, and this is kind of out there, and not necessarily in a day or two, but in maybe a week or so. But look at the 50 MA since the beginning of the year. Okay, and the beginning of the year would be around this area. We've mostly traded above the 50 MA. Here we came close to it. Here we came close to it. And now, okay, last week we touched it for the first time. So I would imagine the next time that we start, trading around the 50 MA, I think the next time we have a greater chance of breaking down. Okay, so should the market go back down, which I think is more likely than for it to go up, okay, maybe a little bit up, but not a lot. I think the market is more likely to go down. Now we may, based on this bullishness, we may need to wait a little bit for it. Okay, like I said, it was a pretty decent gap up this morning. So the market could do several things in the next couple of days. It could trade sideways, okay, to absorb this bullishness, okay, and maybe then go up or down. You just never know. It's too far out. Okay, it could tomorrow it could go higher. We could have a really nice green candle, and based on some of the things that I see after hours, like Apple and so forth, if that bullishness remains into tomorrow morning, the market could easily have a green day tomorrow. Okay, and at that point I could probably pick up some more VIX, because the VXX that I picked up was not a full position. Okay, I picked up a half position, and so even if the market goes up a little bit higher, well, great, I'm gonna pick up some more VXX at a lower level. And with the VXX, you never really should pick up a full position, unless you're really, at a great level, and these are, some pretty decent lows. I do have to admit that $19 level on the VXX is not, it's not something to get too excited about. So there is a possibility that we may pick it up a little bit lower, and that's why I picked up, half a position today, because should the market sell off, which is, the third possibility, guess what? I'm in the money. My VXX is, banking, I'm banking on it with my VXX. And so, sometimes you kind of have to make a decision when you really don't know where the market is going. Okay, pick up half a position and then see what happens, and then pick up some more or get out of it. You didn't put all your money on the line, and so even if you lose, that's okay. You didn't lose too much. Okay, but we are still within this red bar, and so if the market wants to go up, it's gonna have to get above this $158 level, and that's on a closing basis. It's going to have to close above 158. We might get that tomorrow. It's possible with Apple or maybe some other great news. But don't underestimate the market. The market could have a little bit more upside, but it's very, very limited. Upside is limited, okay? And should we break down lower, your real confirmation that the market is going lower is going to be any close below this 50 MA, this blue line right here, okay? Now I want to give you some intraday levels for the spiders into tomorrow. Today was basically that float day and not much really to go off of, so I can't tell you use the intraday high as resistance, because we were trading around this area most of the time. But should the market go lower, definitely this area right here is some really good support, and then this 200 MA is also good support. We could also draw a trend line. Let me just see here if I can do this here. Okay, look at this. That is a pretty good, very sweet trend line. And so this is going to be your first support right here. Okay, this blue trend line. Then I really like this level right here. Okay, this pink or purple. And then your third level for support is going to be the 200 MA. That is if the market should go lower tomorrow. If it should go higher, which is also a possibility, you're going to have a minor level right here at the gap fill, okay, around, you're going to have to kind of double check your charts because I'm not doing this in a lot of detail, but around 158.60 to 70, around that level. And then if we go back to I believe these are the all-time highs, and if I were to draw lines, let me just zoom in a little bit so I get this as detailed as possible. So you could, let me just see here real quick, you could draw a line right there. Let me just see here, move that out of the way. Okay, so let's draw a line between these two highs right there. Okay, well, guess what? We tagged that today and we actually closed on that level. Well, there goes technical analysis. How good is that? Okay, and so there you go. There's your resistance right there. Should we actually gap down lower tomorrow, so in other words, if we open up near the lows right here and the market starts rallying up, this blue line should be some really decent resistance. Now if we open up around this blue line, then obviously it's not really anything to really care about. But if we should start from the lower area and move up, that's going to be some resistance. I'm trying to see if I can find anything else. And then this gap fill right here that I just mentioned, you could also look at this pivot right here at 158.80ish, and then ultimately, which I don't think we'll ever get to this, but I do think this 159.70, well, we might not get there tomorrow or even the rest of the week, but should we get there somewhere into early next week, you do have this 159 level. Now if the market should go back higher and even take out this high right here, I'm going to tell you what I calculated as my high, 163. Okay, now obviously this is just speculation. It's going to take a lot of energy for the market to go up to even that level, and we're talking about all-time highs here if it should even get there. But if you see the market rallying up, in the next couple of weeks, it should see, some pretty significant resistance around 163. And based on my time calculations, if that should happen, I think that should happen around June, July, maybe even as early as May. So look at late May, okay, the last week of May into the first week of July. Between that time, if the market should assume some sort of bullishness, we might see some resistance around this 163. But honestly, I just don't see the market getting above this 163 level. Okay, now that's far out into the future, obviously, but for tomorrow intraday, just use these levels around this area right here, and rewind your video a little bit if you want to look at them again and jot them down. Okay, I want to look at Apple. Apple had earnings after hours, and I'm going to show you the after hours chart of Apple. Okay, zoom in, obviously. Okay, there goes Apple. Apple had, I don't think they necessarily had good earnings. I think they basically guided down or something like that. I rarely really put a lot of effort into, reading earnings. I'm not a fundamentalist. I'm more of a technical analysis person, and I look at how the market reacts. And but what I think is they guided down, but they did announce a dividend, okay? And of course, people are going to be crazy about a dividend because Apple has been in the news a lot recently about a dividend, which when you think about it, I mean, this chart a couple of months ago was at $600. Why do you really care about a dividend? I mean, you lost a third of what you invested, okay, if you were long last year. And so, looking for a dividend honestly is a loser's game. Just admit the truth. You were in a bad trade. You let your loser run, which you weren't supposed to. You lost $200 plus on each share. So, the dividend's not going to save you. You need you need this chart to go up at $200 per share to break even, okay? But I just look at how the market reacts, and the market is reacting very favorably to Apple, okay? And when I look at Apple on the daily chart, and now it is at 425, on the daily chart, it's not really all that impressive. So intraday, of course, it looks like a really big gap. But this is really where we're trading after hours. So when you look at Apple in the longer term, when it was at $700, really, you're talking, very, very minute, small details here. So, you might get that really nice gap up tomorrow morning, and the market more than likely, if Apple should stay around this 425 level and even trade higher into tomorrow morning, the market should also have another good day up, okay, especially the Nasdaq, obviously, okay, because Apple really moves the markets as well. And so if Apple is having a good day, the market should also have a good day, okay? Now, the market is not going to have as good a day as Apple is, so the market may not, be able to gap up, but it might, have that flowed, into the rest of the day tomorrow. And in all fairness, the market already had a very significant gap up, okay, this morning. And so, can you really expect the market to gap up twice, 2 days in a row, when it's already at all-time highs? So what I'm trying to say is, even if Apple gaps up tomorrow, more than likely it will keep the markets up. The market will probably have, a positive day, but it will be limited because we already had that day tomorrow. When you look at the charts today, everything was green for the most part, okay? Now financials were really the leaders today. For example, if you look at something like Morgan Stanley was up over 4% today, okay? So very impressive, obviously. JP Morgan, which is a really more important gauge of the financials and the market even overall, JPM up 1.7%, okay? But as you can see, I already have this drawn in. JPM is sort of trading in this parallel channel, okay? So if you look at this channel right here, JPM does have some nice upside, but it's all within this channel. So it might have some upside to even as high as 52.70 to 53, depending on when it gets there, okay? But of course, the higher a chart goes, the more likely it is to sell off. And so be aware that when we're at these all-time highs, even though we've pulled back a little bit, we still are at pretty much close to those all-time highs. And we've had 3 consecutive up days in a row on the SPY. The market is just basically a time bomb right now, I don't mean to exaggerate it, and I don't mean like a time bomb like where you get the Dow dropping 1,000 points, but I mean that the more days you are up consecutively, just like you see for example on JPM here, the higher your chances that you're gonna have a pullback, okay? And that's what happened here. So you had a rally and a pullback, rally and a pullback, rally and a pullback, okay? And so that's what I'm trying to say. We've had 3 days, 3 good days in a row on the markets. Today was a gap up, okay? So today you could even say it's worth 2 days, right? Because if you look at the market, let's go back to the SPY, okay? And zoom in a little bit. Just look at today's candle. Today's candle, okay, this is where yesterday closed at 156.19. Well, look at today, how much we have gapped up. So this could have spanned across, 2 days to get to the same level, okay? So today was a very powerful day in the markets, okay? And yes, you could argue bullishness. So like I said, there might be a little bit of upside. Nobody really knows. But at the same time, the market is at all-time highs. It could easily have that red day, okay? So tomorrow is kind of a wild card for me. I really don't know what to tell you. And that's okay, because you just trade one candle at a time, and right now I really don't see much of a pattern. All I know is that the markets are at all-time highs, so upside is limited. You might make it to that 163 level, but nothing really trades in a straight line. And so you might get that pullback tomorrow, okay? But watch Apple and see what Apple is doing. I want to compare Apple tomorrow morning, compare it to this afternoon, okay? So right now, obviously, Apple is having that really good, up move. But look at this, the last 10 minutes or 20 minutes, it's starting to reverse that, okay? So don't really put much, detail or emphasis on what you are seeing in Apple now. Apple could, be trading lower tomorrow morning, okay? The problem with Apple is that retail buyers love it. So all these people who don't know anything about technical analysis, all these people who just want to basically throw money at the market without any research, they want to buy Apple, and they're buying it right here, okay? And I don't know if that's a good decision or not, but I know it's a risky decision, okay? And so you might get a little bit of upside from in Apple tomorrow morning, maybe even the rest of the day. But understand that usually institutions take advantage of these buyers, and so they're gonna allow the buyers to basically start buying Apple, and everybody's gonna think, oh, okay, Apple had these great earnings, which they didn't, but it's gonna look like that. And they're going to say, Apple after earnings, it's going up, and so people are accumulating, people are buying. And the institutions at the same time, they're selling Apple to them, right? Because what's an institution going to do with, a stock if they don't have anybody to unload it to? And so they create these conditions. Where they precisely can calculate, how to cause a certain effect in the markets based on earnings and all of that. And it's a lot more complex than that, and even I don't know what they're doing, okay? But to me it looks like they're creating this condition where everybody's going to go out tomorrow and start buying Apple. And maybe it's even occurring now, as you can see on your chart. So people are accumulating Apple, and they're creating this condition where they're basically creating this demand where they can unload these shares at the same time. And a lot of institutions obviously are in Apple, and they want to get rid of this stock, okay? And they want to get rid of it. And Apple is not a healthy chart at all, okay? Don't get it confused, okay? Even though we might get that gap up tomorrow morning, right? Apple is not a healthy chart, okay? And so if you find a bullish setup and you buy Apple, if you hold it for a day or two, that's okay. But don't buy Apple and say I'm gonna hold it for the rest of the year, even though it's at these lows. So you wouldn't be chasing it either, okay? So I'm not saying you're buying it at a bad level. Maybe this is a good level to buy Apple, but at the same time, when you look at what the market is doing, the market is at pretty much all-time highs, and Apple is just at these lows. And so imagine when the market starts rolling over and going down, which is, like I said, it's only a matter of time, Apple's going to go lower, okay? And if you really want to buy Apple, okay, And I know this is a little bit crazy for me to say this when Apple is gapping up, right, after hours. What a timing, perfect timing for me to give you this level. But these are your levels right here. 362, 352, okay, maybe even 309, okay? It's a little strange for me to tell you, to be telling you this. But me personally, if I'm gonna hold something like Apple for a week plus and actually put my money into it, I'm not touching it until here. It goes up tomorrow, great. It goes up, Thursday, Friday. Let it go without me. Okay? If you're making money on it, congratulations. But not me, okay? I want it lower. I do. I want it lower. And then if you want to short Apple, which I personally would rather short it than buy it, I like this level right here. 469.97. And this is a really, really sweet level. This 485. If you can short it right here and, hold it for a day or two, I think you're going to see a really nice reversal here. Okay? But right now, don't touch Apple. I wouldn't want to touch it now, even if it has that gap up tomorrow morning. Okay? And there you go. There's my advice playing out to you. Okay? Don't be here. Don't be that guy that got stuck buying Apple at 4:30. You don't want to be this guy right here. Okay? And you're gonna see a little bit of volatility, and I actually like to see this kind of stuff on Apple. I want to see Apple go up and then go down and then go up and go down. Why? I just bought the VIX. I just bought the VXX. Okay? And so I want this. I want Apple. I want the market to go up and down because my VXX is going to shoot up. Okay? And maybe when it shoots up, I'll get the same result as I would have gotten right here. Okay? And that's pretty much it as far as the market that I want to discuss. Now I just wanted to look at the SPY after hours to see if there's anything else. We do see a little bit of here, like these could be fake prints, and fake prints are basically, these orders that are kind of executed, out of synchrony, right? If that makes any sense. These are orders that, were put in previously and now they're finally getting executed, but they're good to pay attention to because usually these are orders put in by institutions, and institutions usually know things ahead of time, okay? And so if you have a fake print lower, that's a bearish signal. That usually tells you that the market wants to go lower. But the only problem is this is in after hours, and we see these very commonly in after hours. Like you see, we saw it right here in the morning, this morning. And so they're very common, believe it or not. And let me just see if I can maybe find more examples, okay? Not many examples on the SPY, okay, here. But today, in the after hours, we did see two candles, and that's why I want to pay attention to it, because it's two candles in a row. So it's telling me that it might have been the same seller, okay? It might have been the same institution that was basically unloading. And so, keep watching the SPY because this might be a little bit of a signal that the SPY wants to go lower, okay? And I think that's pretty much it. Oh, one more thing I want to discuss. I want to discuss metals and I believe miners, okay? Metals, as we all know, have been really, really struggling recently. Let me take off the after hours. But the GLD, as we know, has had, GLD? Well, for some reason my chart can't pull up GLD. Let's look at the GDX. Why not? GDX pretty much the same thing. It's just that the GDX are the miners, which is actually good because I wanted to talk about the miners too. So in a way, I'm talking about, two things at the same time. But gold has been selling recently. The last week was just brutal on gold, and based on this consolidation here in the last 4 days, I actually think gold goes even lower. Okay, now GDX is at a very, very low level, believe it or not. But if you wanted to see where you could pick up the GDX, okay, you're gonna have to look around this area. So let me just zoom in, and I have to zoom into 2009 actually, 2009, and give you some levels. Okay, here's a level right here at 1574, and then another one at 1745. I really like those two levels. If you could pick up a buy right there, if something like GDX could get there, by all means, those are some really good levels for a swing. Okay, now you could also find some levels right here. So if you can find a level, I think the $20 level sounds like a good idea too, but ultimately if you can wait for these two, pretty good too. And I can actually look at how much it could extend. So let me see here how much that move right here was, and it really depends on how and where it's going to consolidate. Okay, but if it consolidates around this area right here, it would take you to this $20 level. So here's another level that I want to add here. $20 also a pretty good support level. But if by Friday, okay, if by Friday the GDX consolidates sideways, okay, in other words, it doesn't shoot up or go down, I might pick it up for a short. Okay, it's very weak. And another sweet thing that could happen is if this 20 MA, this gold line right here, if it could somehow slope down and coincide, okay, so that, you know, the candle hits it. So in other words, let's say, for example, the candle just kind of hits it right there, okay, that would be your shorting level. But only if it's within this candle. So I know I'm confusing you guys, but what I'm trying to say is, if by Friday, okay, the GDX trades around this $30 level, no higher than that, it should not get above this 30-20 level. And if somehow you see that the 20 MA is sloping down, and it would have to slope down, okay? If it's sloping down and you're within that area, then you could be shorting it. That would be a really nice short, okay? And you know, I'm thinking around Friday or Monday you could see something like that. Let's see, what is this? This was, today is a Tuesday, so we could have Wednesday, Thursday, and Friday. So okay, by Friday, Monday, you could easily get that where this MA slopes down, and you do have this resistance right here. So that's a really good shorting level. And of course, you know, use proper risk management, know your stops as well. Okay, so the best thing about a trade is knowing when to stop out. Sometimes it's not the level, the entry level, so much as it is your discipline to get stopped out. Okay, I want to look at the FCX because I just absolutely adore that chart. I traded a lot. FCX, same thing. FCX had earnings, I believe a couple of days ago. I actually played earnings. I made a pretty decent amount. But same thing here. So if FCX could consolidate a little bit, okay, you could be shorting it. The only thing I don't like about FCX, and I'll tell you one thing, I don't like these wicks at the bottom. Okay, I don't like them because this to me signals it wants to go higher. And I also don't like the fact that it's just shooting up here. So this is what I don't like. What I would prefer is if it went sideways, kind of like that. So if you see a little bit of weakness into the rest of the week with FCX, and it kind of changes this angle a little bit, okay, where it kind of starts trading more sideways, okay, instead of shooting up, it's going more sideways, I would short FCX as well. But I would want to give it more time than the GDX. So in other words, this is not something I would want to short around Friday. This is something I would wait until next week to even look at, okay? And I think I keep saying this is it. And there's always one more thing. Oh, a lot of people are asking me about the FXY because I put out a short, okay? I believe it was a week or maybe even 2 weeks ago, and I said, okay, I like the $27 level, okay? not the 20, the 97. A little bit over 97 was my level to go long, and it never got there. Okay, it made it to 98, never flushed down, but you know the timing was right. It was just the level that was not right, and that's good because I am a little bit conservative with you guys, and a lot of my charts, you know, that you look at when I post my profits and so forth, a lot of people ask me, well, you didn't post that, why didn't you alert us, you made money? Well, I do that because those are usually the riskier stocks, and you know, I don't mind assuming the risk myself, because I take, like I said, you know, in something like VXX, or you know, something that you know may not be the best level, something where I don't really necessarily know the best outcome, I take half positions, and you know, most of the times I end up making money, but you know, sometimes I also lose money, just like any normal trader would. And you know, a lot of those trades I don't post, you know, for you guys because they're higher risk, and I know you guys are requesting them, so I'm thinking about, you know, whether I should actually change that and actually post those trades. So I will have to see, you know, maybe I'll have a special section on the website where I kind of put out those trades, you know, that I'm actually taking, as opposed to only putting out, you know, the more conservative. But at any rate, FXY was a more conservative trade because, you know, even though I could have said, you know, 98, I wanted you guys to pick it up a little bit lower, you know, just to play it safe, okay? And having said that, now I don't even like the $97 level, even if it goes down, okay? I want it lower now, okay? And the reason being is because we already traded around this area right here, so $98, $97, to me that's all the same area, okay? And you know, it also has been consolidating 3 days in a row after a gap down, and this ultimately is telling me, yes, it wants to go lower, but I would want to pick it up lower, okay? And generally with something like this, to play it safe, I would basically reduce it by 50 or so cents, so maybe 40 cents lower. And so I think 97.60. This is just basically my first look analysis, so you know, don't hold me to this level right here, but I think around the 96.60, it's very hard to find a level on something like this, okay? But let's see, we have an area here back from 2008 where we traded. Let's see if I can find anything here. So here's a good level, 96.78. Okay, write that one down. Let me just zoom in to make sure that's the right level. Give me just one more second here. Okay, here's your level, 96.90. Okay, that's almost what we had, maybe about 15 cents lower. If you want to be conservative, trying to see here what we have, 96.23. Okay, this is the level that I like a lot more. I like the 96.23 level a lot better than the 96.90. You might get a short-term bounce around 96.90, so I'm not necessarily discouraging you from going long. So if you want to pick it up around 96.90 and hold it for maybe only a day or so, it's actually going to be a really sweet level. It's not a bad level, okay? But you know, knowing that we already traded around $98, which is not very far from, you know, where this level is, and you really have to be conservative, I think around 96.23 for those of you who are more conservative. And you could also, you know, play something in between. So if you can't make up your mind, you know, you could also play something in between. You do have a little bit of this doji right here, which, you know, may not necessarily be the best level, but if you really want to be in between, you know, go for that 96.60, 96.50 level. So, but around that, you know, area between these two levels, to me it looks pretty good. Let me see here if I can find more, because for some reason all of you guys want to know about the FXY. A lot of you are interested in trading Japan for some reason. Let's see if I can find some Fibonacci retracements. So let's see if I could basically just go from the all-time high to all-time low. Now this one's a little bit tricky because I have a 382 at 99.50. So obviously we already traded there. That's not really the best level. Let me see if I can go for this right here. Not really much I can see here. Not much I can see here. So fib levels are out of the question. And again, these are my first time looks. So, a lot of these things, may not be used in analysis, but definitely, go for these two areas right here. You know, anything below 97, I think you should be fine, because when you look at Japan and just basically the way that this country has been trading, I mean, essentially since September, okay, since September, the FXY has rolled over from 127 to 98. So it has lost about $30, okay? It has lost $30 since last year. And so I think either way you look at it, as long as you can get it below 97, okay, I think I would be comfortable holding the FXY for about 3+ days, okay? And now I know a lot of you are investors, and you want to look at something that you could hold for a little bit longer, but I do think something like FXY could be something that you could hold for a couple of weeks. Another one is gold, believe it or not. But again, we're not at the level where I would feel comfortable to pick up gold. I initially thought last week, we had that level, but based on, a lot of the things that I see in metals and, gold miners and all of that, I actually think we go lower, okay, because I do see some bearish consolidation levels. But I will keep you posted. Just like I had the VXX, posted on under trade alerts on TradeTheseStocks.com, I will do the same thing. Okay, so if you're thinking about FXY or gold or any of those things, and you think that you may have found your level, by all means check out TradeTheseStocks.com, click on trade alerts, and if you find that my levels are the same levels as yours, all power to you, because now we have two confirmations to go long, or whatever your entry is going to be. So by all means check out TradeTheseStocks.com and watch my trade alerts. And I will also try to put up a video for some educational video, actually. So I've been really busy, believe it or not. I'm not your average trader. I'm actually a student. So I'm going for my master's degree in genetics, and so as you can see, understand, it's a lot of work. And just like I missed the VXX today and could have made basically $2,000 on it, just based on the 50 cents that it gained. I miss a lot of things in the market, but I do my best to put out these videos, and thank you for understanding. And I think we're all in the same boat. We all kind of trade, and we have our other things that we have going on in life, and that's the beauty of trading. Once you get it, once you understand the methods, you can basically do it for life. You don't have to be at the computer all the time. You don't have to basically be here from 9 until 5, and you can do things. You can go pick up your kids from kindergarten, you can go for a master's degree or whatever it is you're going for. Go out there, play golf or whatever it is. But as long as you are able to, as a day trader at least, as long as you're able to be at the computer between about, I don't know, 9 a.m. and maybe around 11:30 a.m., you should be fine, because that's really when everything happens. And today, around 1 o'clock, when this fake Twitter, tweet was posted, those are very rare occurrences. And, so it's okay if you miss those things. You have your stops in place, and I do. I always have my stops in place. And, I really never think about actually having, exits in place too, because obviously if I had an exit, I could have made 50 cents. But then again, how do you know? How do you know how much more, a pop like that would give you? But at all times, you should always have a stop in place. If you have work or something that you need to attend to, have your stops in place. And, if you make money, great. If you don't, that's okay too, because you have your stops in place and you lost only a little bit of money. Okay? Take care, guys, and I'll try to post that educational video very soon. So, keep checking my YouTube channels, because that's where I'm going to post it.
Bye.